So get back to session 3. So here in this chapter, we are going to understand what do you mean by analytical procedure, which deals with SA 520. So in this chapter, we are nothing but discussing complete SA 520 standard. What are the SA 520 contents are? First, we understood the word analytical procedure as part of audit procedure in the previous day marathon class. So I told you audit procedures are broadly two types: risk assessment procedure, further audit procedure. Again, further audit procedures are two types: compliance procedure, substantive procedure. Substantive procedures are again two types: test of details, analytical procedure. What is it? Analytical procedure. Analytical procedure is an audit procedure, is an audit technique. Again, if you look at risk assessment procedure, it broadly has three elements. One is inquiry, another one is inspection and observation, another one is analytical procedure. So analytical procedure is something is part of risk assessment procedure, is part of substantive procedure. When analytical procedure is part of substantive procedure, no, when you're performing analytical as part of substantive procedure, no, you call it as substantive analytical procedure. We call it as substantive analytical procedure when we are performing analytical procedure as part of substantive procedures. So now, what is analytical procedure, sir? Everyone, everywhere, where what we heard is completely a theoretical explanation. We never heard practically what is analytical procedure. I'll give you, gunshot 3 to 4 examples. Try to capture the concept within the time. Yes, be active, alert. Now, example 1. First of all, understand analytical procedure is nothing but common sense. Analytical procedure is nothing but thinking analytically. Example, suppose I started the audit. I saw the organization. And this is a very big company. It's an IT company. It's an IT technology company. And I saw I'm the auditor for 1920 financial year. Year closing is 31st March 2020. Previously, somebody have conducted the audit, that is 1819. For that, year closure is 31st March 2019. I just saw number of employees. I just saw what is the strength, what is an employee strength. Last year, there are 1 lakh employees in this organization, whereas current year, it's 1,90,000 employees we have. Oh my God. During this current year, 90,000 employees were recruited. Very good. Okay, fine. Sir, what is the 1819 turnover, 1920 turnover? I opened schedule 3, looked at the revenue from operations. Current year, the turnover is 3 lakh crore. Last year, the turnover is 2.8 lakh crore. I'm talking about turnover. 2.8 lakh crore last year turnover. Current year turnover 3 lakh crore. How much turnover have increased? Just 7% it has increased. Just 7%. How many employees have increased? Oh my God. 90% employee strength have increased. Immediately I got it out by looking common sense. Okay, common sense. When number of employees have increased almost double, why business have not increased? Why business have not increased? At least 50 to 60% business should increase, right? Why only 7% increase in business? Is there any fraud in reporting of the turnover? Is management under disclosing turnover? Or is total number of employees fake? Is there any fake employees in this? Is management doing money laundering transaction by using fake employee IDs? See, by analyzing logically one financial information with another non-financial, a financial information with another non-financial, I'm comparing, I am figuring out a possibility of fraud. One example, another example. Last year turnover is some, let us assume 10 crore. Current year, the turnover is 20 crore. Oh my God. Turnover has increased double the time. Now I saw net profit. What is a net profit? Last year 1 crore net profit. Current year it is only 1.1 crore net profit. Business have almost doubled, right? Obviously, we all know once we reach break even, every 1 rupee increase in sale, it is directly a contribution, directly a profit. You would have learned in marginal costing. Yes or no? So now when the turnover have doubled, automatically profit should also increase so much, right? Why only 10% increase in profit when there is 100% increase in turnover? I asked the accountant. He's silent. He don't know. He didn't understand, first of all, my question. Dear accountant, turnover increase double, no? Obviously, profit should also increase, no? Why there is no increase in profit? He also doesn't know. Sir, I don't know, sir. I accounted whatever it comes exactly. I did not do any mistake. All that is saying. Okay. So I have some questions. Either this turnover is wrong or this profit computation is wrong. How profit is computed? Turnover minus expenses. So I need to look at expenses. I saw first expenditure, purchase. Last year, current year, okay, double is there. Very good. Okay, direct expenditure, no, so double will be there. Direct labor, double is there. Almost every bit is there. There is one indirect expenditure. There is one indirect expenditure called repairs and maintenance. There is one repairs and maintenance account. Last year it is 10 lakh. Current year it is 1.2 crore. Last year repairs is 10 lakhs. Okay, good. 10 lakhs repairs means okay, acceptable. 1.2 crore worth of repair. Why 1.2 crore worth of repair current year? Okay, I found there is a deviation in repairs and maintenance. Significant deviation I found in repairs and maintenance. Now I found a fluctuation, deviation. No, why repairs and maintenance in current year 1.2 crore? Give me month wise breakup, dear accountant. April month, May month, June month, July, August. April month 1 lakh, May month 1.2 lakh, June month 1.4 lakh, July month some 1 lakh, August month almost 90 lakhs. August month, why 90 lakhs, man? In every month it is 1 lakh, 1.2 lakh like that only. But in August month something is wrong. 90 lakhs. What repair you did, man, for 90 lakhs? I opened August month data. Day wise I opened. Somewhere on August 18th, I found 85 lakhs worth of repair. What is 85 lakhs worth of repair? On a mission, single transaction, 85 lakhs. I opened, I saw the narration, I saw the voucher, I saw the bill. It's actually a spare part. And it satisfies the definition of property, plant and equipment, para number 7. PPE definition, it satisfies. It satisfies the recognition criteria as per PPE. Once it satisfies the definition of PPE and recognition criteria of PPE, what do you have to do? 85 lakhs you have to capitalize. But what this fellow did? Debited to repairs and maintenance account. This is where he did mistake. And you know, this mistake would be intentional or unintentional, but maybe here it is unintentional. This accountant doesn't know that much of knowledge of PPE, so he thought, sir, spare part on, I thought revenue expenditure, so debited to P&L. Okay, but see, because I think analytically, why there is a huge difference in profit? Why profit have not increased? Based on this question, I discovered an error worth of 85 lakhs. Tell me, if I just select randomly sample, can I discover this mistake by using a traditional audit procedure called sampling? I cannot. Analytical procedure is, that's why so powerful tool. See, check normally, sample, data, all that verify. Again, after, at the beginning of audit, try to analytically look at balance sheet P&L. Where and all there is huge variation, identify. There you give more attention. Again, once you did audit, at the end of the audit, again see whether for every deviation you have answer or not. Purchases this much, sales, the purchases of current year, last year this much, variation is there. Do you have answer? Why there is a variation? Yeah, if you have answer, that's good. That's when you did proper audit. This is what analytical procedure means. Analytical procedure is thinking. Is it logically correct? Is it common sense wise correct or not? Logically analyzing the facts. So analysis of financial and non-financial information. You see analytical procedure definition. Analytical procedure means evaluation of financial information through analysis of relationships among financial and non-financial, employee data versus turnover with profit. Analytical procedure include what I did now. When I find a fluctuation, I am investigating. Analytical procedure include relationships that are inconsistent with other information. What is inconsistent? Profit is 1 crore 1.1, whereas turnover is double. There is no consistency. which differ from expected value by significant amount. When turnover is doubled, I thought profit will also double, but expected value, expected profit is 2 crore, but real profit is 1.1, significant deviation. It also includes comparison of financial statements with relationships. That's analytical procedure. Sir, why do we perform, sir, analytical procedure? Very simple. We use comparisons and relationships, no? Why do we use comparison relationship? To know whether an account balance, or transaction balance, is it reasonable or not? Turnover is double. P&L profit, net profit is 1.1 only. Is it reasonable? No. So what I did when I find something unreasonable, I investigated and identified fraud. So analytical procedures may help auditor identify existence of unusual transactions, unusual events, unusual amount, unusual ratio, unusual trend that might indicate matters where audit implications are high, where I need to give major attention. So when you do analytical procedure, I can do at planning phase, during audit phase, during completion. In fact, I do throughout the audit. I'm skeptical throughout the audit. Everything in audit will be happen continuously throughout the audit. Remember, simple logic. Especially in planning, no, at the time of planning, no, it will help me identify area of potential risk, where and all huge variation is that their risk is high. So in planning, it will help me to identify potential risk. That's why I do analytical procedure at the time of risk assessment itself to plan my audit in a more scientific way. And what is substantive analytical procedure? Substantive procedure includes test of details, analytical. Since analytical procedures are one of these substantive audit procedure, we can call it as substantive analytical. So analytical, we not only do at risk assessment. When we are checking actual transactions also, you can do analytical. When you are doing analytical procedure, when you are checking actual transaction, that's called substantive analytical procedure, more accurate. When to use substantive analytical procedure? It's a judgment issue, my wish, but I will use it to reduce audit risk. So, and not only that, auditor may also ask management. Management also will do analytical procedure. I will take their result. I will ask data whatever I want. That's it. Sir, substantive analytical, is there any technique, sir? Yes. Ratio analysis, trend analysis, reasonableness test. Employees have increased, turnover, why not increased? Reasonableness test. Structural modeling is not popular tool. We generally don't use. Okay, advanced data analytics tool. This is not required at CA inter level also. Of course, even for CA final also, you can ignore, not required. That's it. Next. Sir, you said so many methods, no, reasonableness test and trend analysis and ratio analysis. There are so many methods, no, which is suitable, sir, for a particular assertion. So suppose, sir, it is purchases. Assertion is purchase. For purchases, which method is useful? For sales, which method is useful? For employee cost, which method is suitable? For fixed asset, which method is suitable? Understand, the suitability depends upon which method is suitable. It depends upon, suppose if I use one method that did not identify any mistake, not a suitable method. I used another method that identifies a mistake, it's a suitable method. Which method of analytical procedure is suitable? That method of analytical procedure is suitable which will detect a misstatement. If a particular method is detecting mistake, that's the most suitable method. That's it. Sir, now fine, sir. By using analytical procedure, what we are doing is we are trying to develop one logical calculation. Something you are logically calculating. You are comparing with actual, correct, no, sir? And if you find so much of difference, you are investigating, sir. Now you are calculating logically something, right? How you will calculate, sir? Based on some data, correct? Based on some data. Now you calculated logically, right? Based on some data. The data must be reliable, right? Data must be reliable. Suppose if I calculate based on unreliable data, and if I identify investigation and talking to CFO of the company, dear CFO, there is something wrong. First CFO will ask you this question: who gave you the data, sir? Sir, watchman gave me the data. Security guard, sir, security guard is working for some other purpose. He is not the right person to give the data. Why did you believe his data, sir? Obviously, the CEO will question this. So the data, what you are getting, so that you can do analytical procedure. Yes or no? The data must be reliable. Only then your analytical calculation, logical calculation is reliable. Only then you compare with actual value and investigate. Only then people will answer you properly. So result of analytical procedure depends on reliability of background data. This question has been asked in November 19 exams for 3 marks. Analytically you calculate something, right? Is it reliable? So that I can investigate further. Is it reliable? It depends on what data you have used. The data you have used is reliable, then this is reliable. How do I know? How do I know background data reliable or not? How do I know? Simple. From where you got the data? Source. If you are getting from an independent reliable source, believe it. Comparability. Okay, you have calculated expected value rate based on background data. Is that background data, can it be used for comparison for the purpose of analytical procedure? Is it useful or not? Check it out. Nature and relevance of information. What relevant? Is that information relevant? Controls over preparation of that. You got some data, right? Who prepared that? Is it prepared in a proper controlled environment? So check it out. This question has been asked for 3 to 4 marks in November 2019. Then this is not required. 8th question. 9th question. Now finally, okay sir, data is reliable, so my result is reliable. Now I compared, sir, actual my expected value profit should be 2 crores, sir, but real profit is 1.1 crore only. There is a significant variation. What you should do? Don't worry, man. Inquire management to provide additional information regarding why there is a huge difference and evaluate the response. They will respond. No, look at the response. Suppose if management is unable to provide an appropriate explanation why there is a difference, then what you have to do? You investigate, you perform additional work, identify material misstatement if exists, repairs and maintenance, why there is a huge variation, accountant did not answer. What you did? You investigated inside in depth. You discovered what? A PPE is debited in repairs and maintenance, which is actually a capitalizable value as per Ind AS 16, accounting standard 10. That's it. So that's about analytical procedure. With this, the concept of analytical procedure is completely done. I don't know how many of you have really seen all these concepts of analytical procedure. If at all you are thinking all these are new, definitely then, as I told you in the previous session, you have to get that smart course at least, because it is not easy, very advanced. Auditing subject, the reason why many students fail, especially old IPCC students, is because they still look at that old methodology, old methods of learning. They don't even identify what syllabus is there completely for them. If at all you're an IPCC student and finding this is completely new for you, then you're wrong. This is completely there in your syllabus. That's it. I hope every one of you understood till now analytical procedure. Tomorrow we are going to start audit strategy chapter. You will be even more shocked to know there are so many new topics out there. Not new topics. Why I'm saying it is new topic? Because many students would have not seen them. So can some of you reply in the chat box? Have you all understood? With this SCA 521 standard we have completed. One standard we have completed. Please watch this video. I'm anyhow streaming on the YouTube. It will be there backup also. Please watch this multiple times. If at all you want to get more clarity, watch one by one carefully, minute by minute, and then read the book slowly. You will definitely crack easily all the logics. But if you want a detailed explanation, as I told, there is a course available. That's it. So then as usual, almost we have covered 10 chapters. We have almost covered 10 chapters. If you observe, sampling is completed and analytical is completed. Risk assessment is the only chapter which we didn't discuss. I'm telling you, I cannot discuss also. Okay. And then strategy tomorrow I'm going to cover, and standards I'm going to cover. I'm going to start tomorrow itself, standards, and day after these 2 chapters. So tomorrow and day after. With the day after tomorrow, we will close last minute revision sessions. Totally 8 days it will be, almost for 18 to 20 hours. And moreover, for items of financials, I'm going to give you a 2-hour recording. 2-hour recording. So as a whole, 22 hours of classes, 22 to 24 hours of classes I'm giving you at free of cost. And these classes will be available for another 1 month. Within them, you have to finish it. After 1 month, I will stop these classes. I will hide these classes. Okay, fine. Mostly I'll keep it. Don't worry, I'll not hide it. I'll keep it. Don't worry. Yeah. So that's it for the day.